I've been in and around technology for over 25 years. I started originally as a product manager, actually for a financial technology company, product manager while in college at Berkeley. And from there, I actually decided to go into investment banking, tech banking in particular, out in Silicon Valley. I was fortunate in the late 90s to be working on a number of different transactions, one of which was on the Netscape AOL merger. And there I encountered both Jim Barksdale and Peter Curry, the CFO and CEO of Netscape. During that time, they, upon the merger, had decided to spin out and start their own venture fund called the Barksdale Group, and recruited me over on January 1st of 2000 to join a 5-person team. And I have been in venture ever since. It's been quite a ride through it. So as I mentioned, I've been in venture for over 20 years, and it's been an incredible journey. About 3 years ago, I reflected back on the number of companies I've worked with and the positive outcomes and incredible entrepreneurs I've had the good fortune of working with. And I knew I loved that piece, the entrepreneurial piece, the ecosystem. Where I did question was there a way to marry that with positive outcome? And never at the expense of, but in addition to, right? So could we find commercial, scalable companies that also happen to have a positive world, changing the world and benefiting end consumers in some way? So after a lot of research, I came across a Midiar network who, has been pioneering impact investing in a much broader sense of the word. And that, what I learned having joined about 3 years ago, I originally sat on the investment committee for all 200 deals they did a year across all their different sectors, one of which was financial services, was that they were leveraging both equity dollars and grant dollars to affect change globally. And depending on the sector and focus, you might use one or the other more prominently. What I found and where my heart aligned most directly was with the work they were doing in financial services, because it very much mirrored what I was looking for. It had a very specific point of view about advancing financial health and economic resilience. It was fully focused on technology as a means of intervention. It was using equity dollars with commercial return expectations and focus. So all of my experience and brand and knowledge could be brought to bear in its full form. And while they did use grant capital, it was very specific and targeted. It was 10%, in which we still use today, of our fund focused on actually the regulatory aspect. Because in a financial services industry, regulation is a very important part of the equation. You can't just innovate and out-innovate and create disruption. You actually have to work within the construct. So it was important for us to partner with regulatory bodies, think about think tanks and thought leaders and how to make sure that the ecosystem understood our theory of change, and work with them in terms of the technology that we thought would be brought to bear to create that kind of impact. And that was an important part of what we do. And so 10% of our capital was providing grant dollars specifically around regulatory convenings, tech sprints among regulatory bodies, thinking through research entities like the Financial Health Network and how to advance and measure financial health in the US and globally. So there were some really deliberate interventions. And that combination of equity dollars really in a venture fund with a focus on the importance of regulation, to me, was a perfect blend. And so ultimately, when we chose to spin it off, we formally operated as a separate fund for about 2 years, but we spun it off last March. And we are still sole funded by Pierre and Pamela Midiar. They are very committed to our mission. And it really just gives us an opportunity to be very clear in our brand, clear in our focus, and building out a global portfolio pretty aggressively under the Flourish Ventures entity. Yeah, look, I mean, I think we are very fortunate in this. We're very fortunate. So the fund as a whole works across a number of markets. The US, half our capital, our 500 million, is deployed in the US. The other half is in India, Africa, Latin America, and other parts of Southeast Asia. The idea of financial resilience is an important one, and it's a global issue. And I think for me, it was important to think through how can we use technology to really enable access, and can really enable access, financial access, but also resilience and health. And it was obvious that there were certain interventions that technology could do that would unlock that in a way that very few interventions could. And I felt like, given my background in looking at direct-to-consumer models and looking at a lot of infrastructure models, that there was a way that my experience could be brought to bear to really unlock and help fund and back meaningful mission-based entrepreneurs who could create some change across that dimension. And the problem was large enough and it was exciting enough. And I think the solutions were tangible enough for me to feel like it was something that I could really be meaningfully impactful in as a managing partner. We started thinking, we thought we had a global thesis around, look, the banks will be unbundled. And when that happens, there will be some sort of rebundling, but what will that enable is people to access financial services very differently. And again, if you're thinking about the low to medium income communities across these markets, it's the only way to create access is by unbundling, right? Because the cost infrastructure doesn't really afford to service those folks in a meaningful way without some sort of unbundling to take place. When that started to happen, we started to see that originally, we made a bet in the UK. We started to realize, look, there are differences across the geographies, but the need is very important. The question is, how does that unbundling affect the regulatory landscape and the technology innovation underneath? And how can we create really meaningful solutions for the consumers? It became pretty clear that there were some really tangible innovations that can happen. Chime was one of them, and they were one of the first in the US that we saw, that we got very excited about and understood the approach. That the CEO was quite scrappy. It was still quite unproven at the time. But we really liked him going back to CEOs. Chris Britt is a phenomenal CEO and had just deep experience having served at the base before with Green Dot. And we felt like he was going to bring a lot to that innovation equation. And so being part of that early on was one that just really cemented my excitement for what could be and what other types of plays and bets we can make along that spectrum. We've been very active. Like every fund, I think early on we wanted to just take stock of our companies, make sure that they were both mentally supported as they were going through their own transitions, as well as making sure they had the right level of funding and cost infrastructure to sustain what we had no idea would be a fairly prolonged downturn. As I said before, fortunately, we were pleasantly surprised by the resilience of this group and the need, I think, of the services. Fortunately, particularly in the US, we've seen the stimulus efforts be quite helpful for the low to medium income population, and they've used that as a method to save and create some buffer. It hasn't been for there's certainly been a lot of struggle, but we've also seen some degree of savings, which has also brought us some degree of comfort that they're going to sustain through this time. And on a global basis, I think as well, we wanted to make sure our companies had that level of support, and particularly around some of the credit-led investments we've made, because you can imagine during a time like this, we wanted to make sure that both the models themselves were prepared for this downturn, but also that we were able to sustain that portfolio. Fortunately, the company was in a very good place. The portfolio was in a good place globally. And so it gave us a chance to continue to think strategically about how we wanted to invest. The nice thing about being an impact and a very directed fund, knowing exactly what our thesis is that it doesn't change during a downturn. If anything, it gives us more clarity in terms of where we want to make bets and having the flexibility to do so. So we've actually done, I think, 5 investments, maybe even 6 now globally since the downturn. Some of whom we've not met in face to face with a consumer entrepreneur, which is rare for us. But it's one that you just spend a lot more time diligencing. But it's been very exciting to continue to double down in what we think are really stellar entrepreneurs. There's really been a flight to quality. We've seen, there's kind of a barbell of companies that are out there possibly maybe needing some additional capital, and maybe those valuations have been adjusted to reflect some of that need. But I think those who are high quality and still very much in line with our thesis have yielded some very powerful fundamentals, and I think warranted some great financial backing. And we've been honored to be part of a number of those. So it's been an exciting time to be in this space, and in particular in financial services. There's always more work to be done there, right? When I say strides, yes, if you're starting from a very low base, you can always increment, and we have seen increment, and I'd be remiss in not mentioning that. I do think we need to be more intentional. And I think we need to be more intentional as it relates to diversity overall, racial diversity as well. But I think, what we are is we are seeing more involvement, particularly at the investor level. I think we still need to see more at the senior level. Part of that is being more aggressive in terms of outreach, hiring, thinking through what backgrounds do we need. It's, before it's more common to see people growing through the organizations within venture funds. Now I think you're starting to see a big shift towards hiring operators, and there are a number of senior level female operators with deep domain experience. So being really thoughtful and targeted about what they're looking for to round out their investment team at the senior levels, I think will be important. I'd also like to see more just on the boards. I think even though they might be GPs, they may not be on boards yet. And so how do we make sure we can continue to provide more board visibility and opportunities for women with, again, very specific, relevant, deep backgrounds in the space? It's not that we're lacking that. It's just that we need to be more deliberate. And then finally, I think we're still really lacking on the entrepreneurial side of the house, both in terms of those receiving funding, but even those that are actually actively seeking funding. And I think that's where a lot more work needs to be done to create more networks, more, I'm in YPO, more YPO-like focused programs that are focused specifically on grooming, training women to think about what it's required to become a CEO. How do we think about the skill set, think about fundraising, think about some of the dimensions that maybe aren't quite as relevant for the other side of the house in terms of how do you think about actively raising a family while running a company, and what are some of those trade-offs, and how does one do that in the context of the startup? And I think all of that combined those are really important elements that need to be discussed, and also perhaps even a curriculum created so that a playbook can be more clearly delineated for aspiring entrepreneurs. So I will say that every parent has a different journey, right? As you think about those trade-offs in your career. I was fortunate to have an incredible spouse who also worked full-time, ran a startup. And I think he and I together really divided and conquered, and were really over-communicated to make sure that nothing was completely dropped. Although I'm sure there's a child or two left somewhere at one point. Fortunately, they all turned out right. The older ones are graduated from college and and settled with wonderful jobs and the like, and the little ones are still going. So so far so good, knock on wood. But that being said, I would say that there were a couple of points in my career where there were choices to be made, and the choices were step on the gas and continue and be the youngest, GP at a firm and try to prove yourself out, or at what expense. And there were a couple of times along that dimension. And with each decision point, it was pausing and saying, what does my family need? Where's my family in this? What could I achieve professionally at what cost? And what is my highest priority at that point in time? And I think one time in particular, when I joined Oak Investment Partners, where I was asked to come in as a senior level individual at their fund, I had to take a step and realize my kids were in formative years in high school, applying to college. Some were in their late middle school, some were in high school at the time. And I knew that I wouldn't be as present if I were to take the role they envisioned originally. So I negotiated for a venture partner role, and they didn't actually have one in the West Coast. They had some precedent in the East Coast, but not on the West Coast. And yet they had a quite large practice on the West Coast. So I negotiated, said, look, can you create, this is what I'm looking for. I want to sit on boards. I want to lead investments, but I don't want to, I want it to be confined to my sector, my space. I want economics in those businesses, et cetera. And I was fortunate to get their support, and that was substantial. And doing so gave me a chance to be very active in my art, in my craft of venture investing. But it gave me a little bit more flexibility, not a lot, admittedly, but a little more, to be able to be as present as I needed to be. And that was very deliberate. I mean, I made a trade-off there. Things would have been different had I taken a more aggressive route at that point in time. Now I look back and think, was that the right decision? Absolutely. Would I have done anything differently? No. But I made a very deliberate choice. And some people won't make that choice. They may decide, that linear or exponential path is the right path for me. But for me, it was an important part as I thought about being a mom and the role I wanted to play in balancing that role. And then obviously in this in this current incarnation of my career, I'm all, working very full-time plus, and it's a much different set of demands, but it's the right time. Because again, my kids are at slightly different ages. They're at the right moments where I feel like I can be very committed and take that time. And I can rely on a partner that's also very supportive. So I think really being deliberate about where am I in each point of my career, and what trade-off, and what am I willing to live with, and what is needed. And I think that, to me, is what's got me through and allowed me to be successful, both as a parent, which is very important to me, and as a professional, which is also very important.